in the QBO gym, and this is where we have numerous hands-on exercises that simulate real-life scenarios that you may encounter as a bookkeeper. Each month covers a variety of new topics and scenarios, and to make it a little bit easier for you, we break it down into 4 different sections. So if you are looking to work on your bookkeeping skills, this is the place for you. And if you want to do an entire month's worth of these all on your own, be sure to join our free 5-day bookkeeping challenge. All you need to do is click on the link in the description. But let's get into today's exercise, which is being pulled from our July Year 1 cardio section. At the top here is an animated video to give you a synopsis of what is going on in Craig's world this month. He is our fictitious business owner. Further down is an interactive pre-assessment quiz that relates to the video up above. Below that are all of the exercises in this section. And at the bottom here is an optional area where after you have gone through all of the exercises in this section and completed them, you will unlock some sample marketing posts that you can use on your LinkedIn to share with everyone what you have learned so far. So let's dive into today's exercise where we are going to practice making a loan payment. Go ahead and click on that link to have the exercise pulled up for you. I have it over here on the right side of my screen, so let's read through the scenario. Renting equipment has gotten or was getting expensive, so Craig took out a small loan of $4,000 to buy his own. He tells you he already entered it in QBO and you only need to record the monthly payment of $142.61. So here's how we're going to do it. If you, you need to click on the link beneath the animated video, a cardio video on the previous page to grab a copy of the loan statement as you'll need it for this exercise. So if you scroll back to the top here of the gym, here is the animated video. Here is this button that says loan statement. Go ahead and click on that. When you do, you will download the statement. And then when you open it up, this is what it will look like. This is that loan statement. So you will need to be in the sample company, the same session of the sample company as you did the previous exercises in. If you have not completed those yet, go ahead and click on the link on the top right corner of your screen. That'll take you to the first exercise. Complete that one and all the ones after it until you get back to this one. They all build on each other, so it's really important to start with that first one. I have the sample company pulled up here on the left side of my screen. This is the last page that I left off of from the previous exercise. So let's go ahead and get started with this one. Craig says he already entered the loan. So first thing we need to do is to make sure that he entered it correctly. So to get there, we're going to click on Accountant Tools and then select Chart of Accounts. So Accountant Tools is on the top of the screen. Click on that. And then under Quick Links, select Chart of Accounts. Now, rather than scrolling all the way through this list trying to find the loan, let's just go ahead and use the search bar right here. So in this field where it says filter by name or number, click into it and then go ahead and start typing loan. When you do, you will see that there is one that will come up in the search. Now, Craig has set up this account as other current liabilities. This should only be used for liabilities less than 1 year, but as you can see on the statement, Craig's loan is for 3 years. That's what the term is right here. If he intends to pay it off sooner than the loan requires, then perhaps it could stay in this account. Otherwise, it would or it should be a long-term liability. So you ask Craig about this, and he says he intends to pay it back over those 3 years. And he didn't know that it would be considered long term. So let's go ahead and make that adjustment first. We're going to click on the down arrow next to View Register and then select Edit. So the down arrow is right here. Click that and then select Edit. And now in the account type field, we want to select long-term liabilities. So click into that account right there, or that field right there, and then select long-term liabilities. And you'll notice that as soon as you do that, QBO is going to give you this warning because you changed the account type. This section is only used if the business owner is connecting QBO to one of Intuit's tax products. And it would only be a concern if taxes had already been filed using this account. Since this is a new account for Craig, you are safe marking the change. If this were a loan that had already spanned multiple tax years, then you would want to check with Craig's accountant, though he or she likely would have caught it by now, and determine the best course of action. So let's go ahead and just click on yes. We know why that warning is there, and we know that it's fine to continue on. In the detail type field, we want to select other long-term liabilities. So click that down arrow, select long-term liabilities. We're all good making this update to this account, so click on the green Save button. And you can see that that has made the change for us. So now that this has been taken care of, let's find out what Craig also did. So we're going to click on View Register, which is right here in the Action column. If you get any pop-ups, just go ahead and click out of them. They're informational pop-ups from QBO, just trying to give you more information about what this area is for. So as you can see here, Craig created a journal entry, which yes, clients can do this. We want to find out where that money went though. So we're going to click on Split to that, which is right here in that payee field. And then we want to click on Edit to take a closer look at the details. Now, the first part of Craig's journal entry is correct. He credited the loan payable, meaning that he increased the amount of liability. The second part, however, is not correct. Opening balance equity is used when you or QBO do not know precisely where the money went. This is typically seen, for example, when converting from one accounting software to another. In that case, you may not convert the details of every transaction in QBO because they were already recorded in the old system. But that is not the case here with Craig. He took out the loan, so he should know where the money went. Did it go directly to purchase the new equipment, like when you go to purchase a car, or did it go into his bank account? You ask Craig about it, and he confirms that he actually deposited it into the checking account. So the only adjustment that we need to make here is just to change the account. So on that line, we're going to change it to checking. Click into that box. You can click the down arrow, and if you scroll to the top, you will see checking is the third account that is listed here. Go ahead and select that. Now, because we're making this change, we may want to add a note to show why we are making it, just in case we need to refer to it in the future. So in the memo field, we're going to type change debit account to accurately reflect the deposit. So if I scroll down here on the journal entry, there is this memo field right here. Go ahead and delete what is currently there. And then you can either start typing or you can do what I'm going to do, which is just highlight over that wording. I'm going to copy it and then I'm going to paste it here in the memo field. And then I'm going to go ahead and now that this is all done, just click on Save and Close. That's the green button on the bottom right corner. Now you're going to get a a warning pop up from QBO. And this one is saying that you are changing the transaction that has already been reconciled. Opening balance equity transactions are always automatically marked as reconciled. So even though we have not actually reconciled this account, this will not affect us. But QBO, because that account was used when Craig had set up the journal entry, that is why it has already been reconciled. But since we haven't, it's not going to make any difference. So we will eventually have to reconcile the deposit to the checking account, but that's not what this message is referring to here. So let's go ahead and click on the green yes button. Now that journal entry has been updated and saved. Now let's go ahead and create the expense transaction to show payment of this loan. So we're going to click on the plus new button and then select expense. The plus new button on the top left corner, click on that, and then under vendors, go ahead and select expense. Now we will need to add the loan company as a vendor, and their name is Example Bank USA. So we can go ahead in the payee field, type Example Bank Loan. And then we're going to click on this plus add new example bank loan to create them as a new vendor. Now, in a real life scenario, it would be a good idea to fill out as much information as possible about the vendor and the loan. For the purposes of this exercise, the only thing that we're going to do is just attach this loan statement here. So we're going to scroll down until we get to this notes and attachments section, and then we're going to click on add attachment and then follow the prompts to add the loan statement to the vendor record. So go ahead and click on add attachment. And then when you do, you need to look on your computer for the PDF that we downloaded. For me, I had downloaded before and saved it in another folder, but yours is likely going to be in your downloads folder. Once you find it, go ahead and click on it and then click on open. And you will know that it has been downloaded because you will see it showing up right here under attachments. So this is all good. We just need to click on the green save button on the bottom right corner. Do that. And now let's use the loan statement to complete this expense transaction. We're going to use the category details grid right here. The principal will be recorded to the loan payable account. Now, since the sample company does not have an interest paid account, we can go ahead and just use bank charges. But of course, in a real life scenario, you may want to set up a separate account so that you can record the interest charges separately from other bank charges. Also note that while the total amount of the expense should be the same each month, there will be a difference in the principal and interest split. So we need to make sure that you read the statement carefully. Now here we don't actually have what is the difference every single month, but we can see right here for this particular this expense transaction that we're going to record for this payment, you can see the principal and the interest updated right there. So in the category field, we want to select loan payable, click into it. You could start typing, or you could do what I'm doing and just start typing in to find it. So whether you scroll or you type it in, go ahead and click on loan payable. In the description field, let's go ahead and type principal. So click into that box, type principal. In the amount field, we want to type what is here, which is $85.94. So click in that amount field, $85.94. And then on the second line, we need to add the interest. So in the category field, we're going to, on that second line, select bank charges. Once again, you can click into it and start scrolling. Actually, it happens to be right here at the top. So go ahead and click on it once you find it. In the description field, let's go ahead and type interest. Click into it, type interest. And then we need to add the amount, which if we look back here at the loan statement, we will see the interest is for $56.67. So click into that amount box, click $56.67. And then we're going to click on the green save and close button because we have shown that we have made this payment here. So click that save and close button. And there we go. That expense has been saved, and that's it. That is how you would make a loan payment. Now, if you like this exercise and you'd like to do more like it, be sure to join our free 5-day bookkeeping challenge. All you need to do is click on the link in the description. We're going to continue on, and if you want to join, be sure to leave this session of the sample company open, as you will need it for the next exercise in the cardio section, where we practice paying a credit card bill. And I will see you in the next video.